Hello, Maverick traders. Welcome out to your currency recap, October 23rd. Corey here with you. Let's have some fun. We are going to look at the markets, what news is out there. The 10-year bond temporarily traded above 5%. What does that mean for markets? It gave that back initially, but that's a piercing of a significant psychological zone. Technical analysis on the broader markets. We remain in downward trends in equities, and we'll look at crypto, we'll look at FX, we'll look at where we think the next best trades are positioned. All right, so as we look at the markets, here's the way I've got it stacked up. Obviously, crypto has been strong. If you've been paying attention to that market, it has been booming. We had a big burst higher last Monday, and I thought it was a little bit of an exhaustion signal and just had it wrong. We backed up. We did go down the next day or two, but we've since pivoted right back up. So that remains bullish. Another big update today. Some strength building in a little bit more defensive areas. US dollar is defensive, Euro can act defensive, Swiss franc, Japanese yen is going sideways, but then your risk on currencies, CAD, Kiwi, Aussie, we had them more on the bearish side, and I just think they continue to be more on the bearish side with a special emphasis on the Kiwi and the Australian dollar. At least Canada has some oil strength. You know, that commodity strength may cause it to outperform. It has outperformed, but those continue to be the weaker segments of the market. So as we look at today and how it stacked up, the 10-year yield was a big story. We had yield spike above 5%. That means the U.S. government is paying you more than 5% per year to borrow your money for 10 years. That's a significant premium. I mean, heck, not too long ago, you could take out a mortgage at 3%. So, you know, if you have mortgages at 3 and now the government pays you 5, you're money positive that way. So yields have really risen, and there are a couple of things that are problematic with that. It's not an immediate concern. It's not like that just instantly kills the economy, but over time, it gradually makes a slowdown in economic activity, right? The economy is this huge ship. It doesn't just turn on a dime. It's not a speedboat, but over time it will shift, and corporations and consumers are going to have to borrow, but they're going to have to pay a lot more in interest to do so. That hurts their purchasing power, their profitability, and it is a slowdown concern for the coming year. But in the short term, markets are probably pricing in some of that. They're just going down. We're just in a downward trend. We're in a risk-off scenario. That's been the position that we've been taking, as that was the path of least resistance, and it just continues. So I don't think you have to overthink it right now. Euro and pound a little stronger on the day. We've got some weakness in Japanese yen, US dollar, and Swiss franc for today. But ultimately, those trends are kind of consolidating, and we'll look at some of those charts a little bit later. There was big news in the oil space. Chevron announced that they're going to buy out Hess Corporation, a big oil company. That's a big deal, the biggest oil deal that Chevron's done in multiple years. And then, like we said, crypto just continues to run higher. The big news that transpired over the past week was crypto got approval. Well, essentially, Grayscale got approval to do an ETF. And an ETF, an exchange traded fund, is just a simpler way for people to buy into the crypto markets and not have to buy crypto itself, not have to open a crypto brokerage account and such. And that has really fueled a buy in all of crypto. Whether that's justified or not doesn't really matter. It's the path that crypto is going on. So Bitcoin, Bitcoin Cash, Ethereum, Litecoin, they're all up nicely today and over the past week. Equities, not so good. So two roads diverging. Crypto outperforming, equities underperforming. And you can see that we've been in a downtrend. So no huge surprise that we rolled over here, that this was an area of weakness. The slope of these moving averages is lower, just a weaker market environment. So as we look at this together, first I'm going to highlight the downtrend line like we talked about. And I want to highlight a series of lower highs, as you can see, and lower lows. We just made a new low today, so that trend just continues to the downside. As we look at this week, we've got a few headline events that I'll highlight. We've got tomorrow some manufacturing and services PMI here in the US. We have Fed Chair Powell speaking again on Wednesday. He just spoke on Thursday of last week. Bank of Canada with their monetary report, not expected to raise rates. They're expected to keep rates unchanged at 5%. We also have the ECB meeting. They're expected to keep rates the same at 4.5. We've got advanced GDP on Thursday. And so pretty busy week. And then finally, to wrap it up, core PCE, which many argue is the Fed's preferred inflation gauge, much more than CPI. So if we're looking at these as most impactful, it's really Wednesday, Thursday, and into Friday morning. That's the heart of it for trading events. You've got the Bank of Canada, you got Fed Chair Powell speaking, and the ECB all on Thursday, and then you got core PCE on Friday morning. So that 24-hour window is jam-packed with some things that can move CAD, that could move US dollar, that could move euro. So be aware of that. Now, as we look at possible trades, the first area to highlight is the euro. Nothing too special about this, but it is a bottoming out process. We've gone through the process of bottoming out down here, rounded bottom. Now we've pierced above the 50-period moving average. I wouldn't chase the momentum, but you'll probably see in the next day or two a little weakness. It could even be into the ECB meeting, and I'm looking to buy the dip in euro. Another area that's interesting is the US dollar. Here we just have an ascending triangle, flat resistance there. You can see how we're just consolidating back and forth multiple days in a row here. I think this should revert to the upside, a break higher, not lower. So for this week, continue to look at things like euro and US dollar for opportunities to buy on dips or buy on breakouts. I'm going to continue to look to short things like Australian dollar, New Zealand dollar, and then if you're just playing flat momentum, you have to stay long crypto until you start to see a reversal. It really can crash upward. Crypto is a highly volatile market, so we could have a significant burst higher before it's all said and done. I hope you enjoyed the currency recap. Have a great rest of your day. We'll see you next time.